Bad news, everybody. The Florida real estate market is falling on its head. Home sellers everywhere are releasing their properties at record low prices. I'm sorry, that's not the news for today. If you've been on the sidelines wanting to buy a house here, unfortunately, it's still holding out as one of the most profitable markets in terms of price growth in the entire country. In fact, 10 of the top markets, according to Redfin, that have year-over-year price growth are still in the Florida market. So here's the deal. Many of those markets are already showing signs of cracks and correction. Even though the Florida market is much further ahead of most of the markets throughout the country, there's some changes ahead in the future of this marketplace. Today, I'm going to take a deeper dive in the Orlando metro area. If you're wanting to get a wider update throughout the rest of the Florida market, that update is coming here in a few days. But today, we're going to focus on the home marketplace of Florida. I'm going to go through the top cities within the Orlando market. We're going to take a deeper dive and let you see exactly what's going on. But let's get into the news. All right, everybody. According to Redfin, U.S. homeowners have lost $2.3 trillion in value since the June peak. This comes out today as I'm actually recording this video. They said the Bay Area housing has lost more value in percentage terms than anywhere else in the country. Love to hear constantly from folks from California in the comments saying, California's holding up just fine. The values there are shifting pretty dramatically. Florida, meanwhile, has been seeing the lion's share of the gains throughout the housing market. We've been seeing that there's no secret that the South has been faring better than all of the other parts of the country, predominantly because data has shown that there's still a lot of people moving in this direction. I know a lot of folks, find that to be a paradox because Florida's wages usually are not holding against the West Coast. They're usually not as strong as the Northeast. But one thing you got to keep in mind is people are moving here from those areas and they're keeping those Northeast wages while living within the state of Florida. It's also become a problem because if you want to live here locally and work locally, your wages to hold down a payment to live here is getting ever more challenging because we are becoming more interesting from those outside of the area. But check this out. Florida housing market, same article in Redfin says, is holding value relatively well. Total value of homes in Miami rose 19.7% year over year to $468.5 billion. In December, largest annual increase in percentage terms. According to Redfin analysis, look at this. Next came, within the state of Florida still, Northport, Sarasota, which by the way, inventory is rising there. Month of supply is climbing there. So buyers are really getting standoffish. However, home prices of what is selling is still markedly higher over a year ago. Knoxville, Tennessee makes its way in there. Tennessee holding strong. Charleston, South Carolina. A lot of folks on my channel keep asking about Charleston. Obviously, values are still high year over year. Lakeland, Florida, 16.9%. Florida was home to 6 of the 10 metros with the largest annual home value gains year over year. So we got to say, we're not going to talk about Lakeland today, but Lakeland making the list is interesting because Lakeland is undergoing dramatic change right now, folks. Let's talk about the overall market of Orlando before we start diving into each market uniquely. I've got a couple cities I want to bring to your attention. Buying versus renting has become a major factor in how many first-time home buyers come in the market. Buyers are oftentimes going to weigh what does it cost to buy versus rent. And I got to tell you, Florida has one of the narrowest gaps between buying and renting, particularly lately. This gap was wider earlier, a few weeks back. You can see back in October, the gap was pretty severe, but prices and payments are starting to settle a little bit as we see, a little bit of a drift down in the interest rates recently. That's obviously being given back a little bit, but you're seeing still about a mid 6% interest rate on the 30-year fixed. It was over 7 as that's come down. There's been some price softening in a lot of these areas where average price, a lot of different metros are 6, 7, 8%, 9% down over June of last year till now. That's softening the impact of the actual housing cost. So buying is getting cheaper as we can see from the peak. Now, as you see this, rents are also starting to have a little bit of a downward pace going back to August. So rents are actually softening. This is a good sign, folks. You can see right here that according to buying versus renting, the margin is just $370. Now, this is good because I looked at this maybe 3-4 weeks ago, and this 18, 19, 20% was closer to 30%. So the graph is actually getting closer, and what that does is it does entice buyers to make the decision, because when you're talking a $300 budget deficit, every area is different. Some areas are going to have a much wider gap. Like, the homes are much more expensive versus being able to rent in the area. So it's case by case. But when this gets a little bit narrower, this is good for the housing market. And that's good for Orlando to see. Okay. Look at the home building permits. Okay. So what we have here is total permits on the red line, right? Look at it. It has gone straight down. Okay. So we had a peak here in May of last year, and volume of permits being pulled it's plummeted since then, which is good. I mean, your actual, we came out of the bottom of the last housing crash and we kind of found a homeostasis here on 25,000 permits. We're almost back to that, folks. We're getting close. It is going down. Single family is falling in terms of permit pulls. Multifamily and condos are also coming down as well. So you're starting to see, that coming through the pandemic right here, these levels in the mid 20,000 range were just really starting to come back. And we may see it fall below that. I mean, you might see that builders, are so bearish in terms of being able to move their properties, they get concerned. We'll have to see what happens. I mean, in 3-4 more weeks, another 2 or 3 months pile on, this continues to fall, and you're going to see more of the slack coming out of the line in what's being produced. There's going to be less new construction products coming out, as 6-8 months from now this cycles through, less inventory out there, which is good. I mean, we need to have it, be tight. And I think the builders ended up, kind of setting on some inventory after June slowed down. Cancellations, obviously, fourth quarter of last year, KB Homes came out and said, hey, our data shows us that 68% of our files are canceling. A lot of people couldn't qualify. So there was all this new inventory that needed to be sold. And so we have to have that shake out through the lines. All right, so let's look at inventory growth on a few key markets throughout the Central Florida area. So right here, we have Orlando down here in the middle. I wish this graph were easier to see for you folks. But you can see Orlando here. You can see Great Lake Apopka right here. This market right here, we have Disney here. We're just above Disney. 34787 Winter Garden. Inventory year over year up 163.8%. So they went from 112 listings to now pushing 300 listings. Right next door, Windermere, 158% in terms of inventory going up. You have Ocoee, which is just barely. I mean, they had a very small number at 30 listings in January of last year. They're at 50. So they're only up 65% in Ocoee. 34711, which is the prime area for Claremont. Claremont is up 119%. Claremont is actually very, very stagnant though. You're going to see their month of supply is incredibly high. Some other marketplace I want to show you, 32779, which is Longwood, is up only 50%. 50%. There's a key reason why Longwood's only up 50%. They are aggressive on price reductions. The folks in Longwood are not playing around. Down here you have Altamont Springs up 96%, 108%. You have Winter Park, Castleberry 111%, 68%, kind of come in the middle of town. College Park, downtown area, still under 100%. Haven't quite doubled their numbers just yet. But take a look at this. Let's look at price cut share. Now this is interesting, okay? And I'm going to talk more about this here in a second. Look at the price cuts in 34787. They're up 165% in inventory, okay? They're only cutting barely 2 listings out of 10 has seen a price cut out of the total inventory. Why? Doesn't make sense, does it? You have 3471 Claremont, 30%, okay? Now we're getting serious. 30% is a big number, okay? When you pass a quarter of all the listings in the area cutting the prices, people are trying to get out, folks. 30% there. Windermere is at a 22% price cut, so it's starting to happen in Windermere. Ocoee, 24%, so 1 out of 4 in Ocoee, which I told you hasn't really adjusted that much. Let's go up. I want to see back up here in Longwood again. 327. So look at Longwood. 1 out of 3 listings had price cuts. And this is down. Like a month ago, it was even higher. Oviedo is 22.9%. So a lot of these hotter marketplaces, very popular, like, down here north of 32789, Winter Park area, 17%. Like nobody's reducing their price, even though inventory is up in a lot of these areas. We're going to come back and discuss that in a moment. But you can kind of see that across the board, most of the areas in this particular, Central Florida marketplace, you've got the downtown areas still, not even quite double what we were at a year ago. So you had a low number last year, but you have some of these outer areas that are seeing, 140, 160% increase in inventory, which is substantive, okay? But they're not selling. Okay, I'm going to show you some other things here. Let's jump into the graph. Now take a look at this. This is the entire Orlando, Florida marketplace. Now, this is stellar MLS, predominantly Central Florida. Granted, this does have some marketplaces close to the Space Coast and even some towards Tampa. But take a look at the average day on market. So we had a bottom out last year around 69 days on market. We are going towards double that, folks. 108, 109 days on market. That's homes just sitting there, sitting on the market, not moving. Average sold to asking price. This is the percentage that people are paying versus someone's asking price. There was no negotiation last summer, folks. 100% is what people got, and it just kind of slid to about 3% down off the asking price. This is the problem right here, okay? So you see all this 100% growth, 150% growth. Units sold is way down, okay? So, a year ago, 4,000, 5,000 units about this time of year, only 2,500 units in January. Numbers were on the floor. A lot of homes just not selling. And then average price of homes sold, you can kind of see it wrapping around this corrective move. This is only a year of data. If I pull this back to 3 years, you'd see it climbing up this big hill and hitting this pinnacle right here. And now you can kind of see it dropping off the other side. So right here, again, this is the entire database. This is an index of a lot of houses. You had a peak price of $428,000 in May, and then at the same time, we're down to $396,000. So that is around $35,000, which represents probably 7-8%. Again, that's not year over year. That's just looking for the run down since interest rates really ballooned, and we all saw the market kind of slam shut, so to speak, at the end of the summer months there, May, June last year. So essentially, this is pretty good news. I think this is going to be a stabilizing force for the market. I think affordability is still the problem, and I think as we kind of look through all of these graphs, you're going to notice one thing. There's a massive amount of stagnancy in the real estate market. There's a lot of inventory kind of piling up. It's not coming to the market in record numbers. It's actually coming to the market at record lows. The amount of people actually bringing a home to the market is not a high number, but the inventory isn't being bought. And I'm not talking about this today, but the Mortgage Banking Association, a lot of the recent surveys that they've ran is showing buyers are just pulling way back. Okay, so the volume of people actually making application and wanting to get in the market is extremely low. You also have a record low inventory of investors. So all that cash money buyers, they've left the marketplace, and we're seeing a record low reaction. Year over year investor activity is just, it's on the floor. So the investors aren't there picking up the slack. And then with that being said, the inventory that's there, while it is not a huge number, particularly in Central Florida, you're just seeing that buyers are pulling back and sellers aren't reducing the prices. So sellers are almost in a weird standoff. So instead of the sellers kind of bringing themselves to the table and saying, all right, we're going to bring these prices down and get out, day on market is climbing. In fact, it's doubled in a lot of these marketplaces in Central Florida. And the amount of months of supply, okay, that means you take a calculation of how few homes are selling, because sales are way down, and that little number that's selling against these houses that are trickling to the market, they're being absorbed so slowly that the actual number of sitting houses is actually climbing out into big numbers, big territory. You're seeing a lot of marketplaces throughout Central Florida. We're going to see today 150%, 170% year over year inventory growth. But the sellers are just standing there, blank-eyed stares at the buyers, not reducing their prices. And you're going to have a lot of things taking place. You're already seeing a flood of realtors leaving the marketplace. And a lot of these realtors are going to struggle because they don't actually know how to ask the seller for a price reduction. They don't actually know hey, I need to tell the seller that it's time to bring the price down. They've never been in a market where they actually had to have this discussion. And so they have no idea how to deal with it. So, John Burns actually came out, which is a real estate data enterprise, came out and said, hey, look at the number of agents in the market. The number's collapsing. So we're actually seeing, a big number of agents actually leaving the market. And a lot of that's because there's less volume to bring a buyer to actually sell the house. The buyers are just walking away. And sellers, if you get a listing and the home seller hires you, never reduce the price, never sells, you're out there for 6 months, nothing happens. You spend money, spin your wheels, and work hard and nothing happens, you decide you want to quit the business, which is good. I mean, either become a professional that can talk to sellers and help them sell their house, or exit the business. And right now we're seeing a stagnation across the Central Florida market. I'm going to show you market by market what's going on. But that's the back end kind of headline, large 30,000 foot view, if you will, of exactly what's happening. You're having the percentage of inventory climb, percentage of price reductions too low. And they're just, sellers aren't taking action. They think that somehow magically the market's going to turn around while they're standing there, and you're having them age their properties on the market while nothing's happening. And, you know, with that being said, the reality is when something tips, you know, what's that look like? Okay. Either interest rates are going to come down really low and spur the market on, it's going to sell it off at these high prices, or you're going to have a worse marketplace. You have concerns of actual recession entrenching itself, where sellers get in a position where they actually have to sell, and then that driving, you know, this marketplace where they actually need to move the houses, you know, and then it's group thinking, right? Sellers that aren't, they're all sitting off, not reducing, then they start reducing all in mass. They do it at the same time. It's like, oh, we should reduce now. I have to reduce. The news told me to reduce. Everybody's reducing. Then the whole thing kind of comes down together. So that's, you know, it's kind of one direction or the other. Right now it's stagnant. That's the market.